Okay, imagine this for a second. You've got one of the oldest, most established cryptocurrencies, right? And suddenly it might find this new partner, something dynamic that could, well, supercharge how it works. What if an asset we mostly think of as just a store of value was about to get this whole new layer of utility, like totally changing its role? So yeah, this deep dive is all about a really fascinating proposal, one that could genuinely reshape a big chunk of the crypto landscape. We're really digging into the future of Cardano, ADA, and how it might really connect with Bitcoin. Our source today is this intriguing article from Bitcoinist.com. The title kind of says it all. Charles Hoskinson backs ADA as Bitcoin's DeFi layer. Is Cardano set to outperform BTC? Bold stuff. So our mission for you listening in is to unpack what this proposed integration actually means. Why is it even being suggested? And maybe more importantly, what are the potential implications, the knock-on effects for both ADA and Bitcoin? We'll look at the arguments for it and also the hurdles, the things that could make or break it. Okay, let's unpack this. Definitely some intriguing material here.
It's all centered around a pretty big vision for, well, a crypto OG.
Yeah, and what's really fascinating, I think, is how the source isn't just throwing out price numbers, though it does do that too. It's laying out this clear sort of strategic vision for how two very different cryptocurrencies could actually work together. They're often seen as rivals or just operating in totally separate worlds. But this shifts the conversation. It's not just which coin is better. It's more like how can they complement each other to build something, well, practical, more useful.
That's a really good point, a crucial distinction. And speaking of big visions, we absolutely have to start with Charles Hoskinson, Cardano's founder. He's made what the source calls one of the most ambitious predictions maybe ever for AD. It just jumps right off the page.
Right.
The article says Hoskinson thinks ADA could surge to somewhere between, get this, $80 and $800. I mean, it's not just a big leap, right? That's monumental from where ADA is today. What's the thinking here? What makes a claim like that even plausible, according to the article? It can't just be wishful thinking.
No, you're right. It's definitely positioned as more than just optimism. The plausibility, as the article outlines it, really hinges on his core proposal for what ADA does next. He sees ADA becoming the yield-generating layer for Bitcoin's DeFi ecosystem. So that huge price target isn't just pulled out of thin air. It's tied directly to this very specific and currently unfilled utility gap in the crypto world.
Okay, so let me see if I've got this straight. He's not just saying ADA is great, it'll moon. He's saying it could fill this specific job that needs doing related to Bitcoin. And that job, that function, would drive fundamental demand.
Exactly. Precisely. The source draws a really sharp contrast here between Bitcoin and Cardano. Bitcoin, well, we all know it's widely seen as digital gold, right? A solid store of value. Its strength is its scarcity, its decentralization, its track record, it's the bedrock. But, and this is the key point the article makes, Bitcoin's current setup, its architecture, it just lacks those complex yield-generating tools or the kind of robust DeFi capabilities you see on platforms like Cardano or Ethereum. It's super valuable, sure, but holding it is mostly passive.
Ah, okay. And that's the opening for Cardano then. It's not trying to be Bitcoin, but maybe add to it.
That's exactly right. Cardano, on the other hand, was designed differently, built from the ground up with real-world functionality and a vibrant ecosystem in mind. Hoskinson points out, and the article highlights this, that ADA holders already get benefits like staking rewards and ecosystem token incentives. That's a fundamental difference, how you get value. Bitcoin, you mostly just hold it like gold in a vault. Cardano lets you participate actively, earn yield within its system. It's more dynamic. The article actually quotes Hoskinson saying, Cardano does substantially more and will end up being the yield layer of Bitcoin DeFi. Think of it like this. Instead of your Bitcoin just sitting there, maybe you could lock it up, somehow connected through Cardano to earn interest, or use it in lending, basically putting your digital gold to work. And if this vision plays out, the source suggests ADA could see that massive growth, maybe 100x or even 1,000x. That's the argument driving those otherwise pretty wild price predictions.
Okay, wow. This is where it gets really interesting, isn't it? Because like you said, it's not just about AD's price going up. It's potentially changing how Bitcoin itself could be used. Bitcoin, the digital gold, suddenly gets this DeFi engine bolted onto it via Cardano. That feels like a huge shift in how we even think about Bitcoin's role.
It is. It's a potential paradigm shift, yeah? It acknowledges Bitcoin's strength, that base layer value, that unshakable foundation, but then it proposes this, pretty innovative way to unlock more utility, more yield from that value, something Bitcoin doesn't really do on its own chain. This is where that whole idea of cross-chain interoperability stops being just the tech buzzword. It becomes potentially a really key economic advantage. It could make Bitcoin feel less static, more dynamic, but through this kind of partnership.
Okay, but while the predictions are big and the vision is definitely grand, there's always the history, right? Performance history often tells a different, maybe more complicated story. The article does dig into this battle of performance and utility between ADA and BTC, and it hasn't exactly been a smooth ride upwards for ADA compared to Bitcoin, has it?
Oh, far from it. The source gives some really interesting historical data points that they really highlight the volatility, how quickly momentum can shift in crypto. For instance, back in late 2024, ADA actually outperformed Bitcoin quite significantly by 160%, the article says. That probably reflected some optimism then, maybe around Cardano developments. But then, as tends to happen, the momentum shifted. By mid-2025, the article notes ADA was lagging behind Bitcoin, a clear reversal. Maybe market sentiment shifted back to Bitcoin stability, who knows?
And the swings just keep coming. It really shows how hard it is to find consistency in this space.
Exactly. And then the trend started reversing again more recently. The article points out that in June, just recently, ADA gained nearly 30% more than BTC, suggesting, maybe renewed interest or some short-term positive news. But, and this is crucial, you have to look longer term too. Short bursts can be misleading. On that long-term view, specifically looking back since 2021, ADA is still 88% down against Bitcoin. Ouch. So this back and forth, it's not just random noise, it underlines how complex the market is. Strong stories can drive short-term pumps, sure. But long-term trends depend on so much more macro factors, real adoption, overall market mood. It shows that even with a cool vision, the market does what it does.
Right, so it's not just about the tech or the roadmap. It's how the market digests all that, how it values potential versus reality, often very quickly. And what about right now, the current market stuff? The article mentions some specific short-term signals.
Yeah, it gives a snapshot of the current feeling, and it's a bit of a mixed bag. It notes that short-term metrics like the spot taker CVD reveal increased selling pressure. Now, for listeners, that spot taker CVD basically tracks aggressive buying versus selling in the spot markets. So more selling pressure suggests maybe traders are taking profits or feeling a bit bearish right now. However, it's not all pointing down. The article also brings up a counter signal, something positive. AD's realized cap recently climbed from $23.04 beats to $23.66 beats. Now, realized cap is interesting. It values coins based on the price when they last moved on-chain. So an increase suggests renewed investor confidence despite market turbulence. It kind of hints that even with some short-term selling, maybe new money is coming in or long-term holders are actually buying more, believing in the future potential.
So what does all that mean practically? It sounds like AD is kind of navigating choppy waters. Some headwinds, maybe, but also some underlying strength, some investor belief, almost like it's trying to find its footing in a storm with different currents pushing and pulling.
That's a really good way to put it. Yeah, it highlights the complexity perfectly. You've got the short-term trading noise causing dips and pops, but then you also see these signs of conviction, maybe from investors accumulating for the long haul. Perhaps they're the ones really buying into this integration idea we've been talking about. It shows not all money in crypto acts the same, There's strategic capital, too.
Which brings us right back to that big vision.
Yeah.
The integration with Bitcoin's DeFi ecosystem. This really feels like the core of Hoskinson's whole argument, right?
Yeah.
Can you elaborate a bit more on why this connection is so significant beyond just, lending two chains?
Yeah, it's significant because it tries to solve a pretty fundamental, widely known gap in Bitcoin's world right now. As the source says clearly, Bitcoin currently lacks the DeFi infrastructure that platforms like Cardano or Ethereum possess. Bitcoin was designed brilliantly as peer-to-peer electronic cash, and it's become this amazing store of value. But it wasn't built for complex smart contracts, not in the way these newer blockchains are. It's secure, it's valuable, yes, but it's relatively inert, programmatically speaking.
So it's almost like Bitcoin is this huge, valuable battery, massive energy stored there. But it doesn't have the wires or the appliances to use that energy for complex stuff. And Cardano is proposing to build that grid, that engine, to harness it for DeFi. That's a powerful idea for interoperability.
It really is. And if ADA does become that bridge between Bitcoin and decentralized finance, the potential benefits for Cardano could be huge. And the ripple effects across crypto could be profound. The article mentions a few key gains for Cardano, greater adoption, because you're tapping into Bitcoin's massive user base and liquidity. A big jump in transaction volume as DeFi activity using Bitcoin collateral would flow through Cardano, and naturally that leads to potentially much higher long-term demand for ADA itself because it would do something essential in this new setup. It's not just another smart contract platform then, it's critical infrastructure.
But, okay, this sounds amazing, but it also sounds incredibly difficult. This isn't just like flipping a switch, right? What are the big hurdles? The things that absolutely have to go right for this vision to actually happen. Building that bridge sounds complex.
You're dead right. It's hugely challenging. The source is pretty clear. The success depends on several critical things, and each one is tough. First, you need really robust, really secure cross-chain infrastructure. We're not just talking about sending tokens back and forth. This is the deep tech needed to let assets and data move securely, trustlessly between Bitcoin and Cardano. Think complex cryptography, making sure both chains agree on the state of things. If that bridge isn't rock solid, forget it. Second, developer support. Absolutely crucial. You need people, talented devs, building the actual DeFi apps and services that use this bridge. Building the highway is one thing. You need cars, trucks, businesses using it. That takes tools, good documentation, getting the community excited and involved. And third, maybe the biggest wildcard in crypto generally, regulatory clarity. This kind of cross-chain DeFi, especially involving giants like Bitcoin, is operating in a legal gray zone almost everywhere. Uncertainty about rules can just kill innovation, scare off big institutions, and create huge compliance headaches. It could block the whole thing before it even gets going. So yeah, not just tech problems, big ecosystem challenges.
That makes total sense. Secure tech, busy builders, and clear rules. Without those, it stays a vision. But let's say they nail it. If all those complex pieces somehow fall into place, what's the potential payoff, according to the article?
Well, if it all aligns, if the integration works well, the article suggests this could really solidify ADA's place as a high-yield, utility-rich asset.
Mm-hmm.
And potentially, yes, outperforming Bitcoin in functionality and returns. It's bold, sure, but the logic is there. By adding this utility layer to Bitcoin, ADA taps into a market way bigger than its own native ecosystem. It leverages Bitcoin's liquidity, its user base, its reputation. It creates a synergy, right? Bitcoin provides the trusted value. Cardano provides the dynamic use for that value.
This really does make you wonder. If this integration truly happens, does it fundamentally change how we understand Bitcoin's role? Beyond just being digital gold sitting there, it feels like it would make Bitcoin much more active, even if another chain is doing the heavy lifting for the activity. How does it redefine Bitcoin, maybe?
It absolutely could redefine it, yeah. Bitcoin wouldn't just be hold it forever digital gold. It could become the foundational asset for this huge global DeFi world. With things like ADA acting as the essential functional bridges, it sort of turns Bitcoin from just a value ledger into something that's programmable, something that can generate yield, even if indirectly through these other layers. That could open up totally new ways to use Bitcoin, to secure value with it, to think about it. It's about unlocking potential that's maybe been dormant, building new financial tools on Bitcoin's security. So just to wrap things up quickly, our deep dive today really looked at Charles Hoskinson's, let's call it ambitious strategic vision for Cardano's ADA. The core idea, leverage Bitcoin's massive ecosystem by becoming its go-to DeFi yield layer. And this vision comes with those huge potential growth numbers for ADA, repositioning it as this high utility asset that doesn't just compete with Bitcoin, but actually enhances it.
Yeah, and we really tried to peel back the layers on that proposed relationship. Bitcoin is the rock, the store of value, and Cardano is the engine driving new function and yield on top. It's this fascinating mix, isn't it? Bold predictions, yes, but also that historical data showing AD's ups and downs, and crucially, that clear look at what needs to happen for success. The tech bridges, the developers, and navigating the tricky regulatory waters. It's pretty amazing to see how these ideas keep pushing the boundaries, moving beyond just price speculation towards, well, complex real-world interoperability.
And if you zoom out, connect this to the bigger picture. This whole ADA Bitcoin thing is like a massive test case, isn't it? Whether integrations like this succeed or fail could seriously shape the whole future of DeFi.
Yeah.
Not just for these two coins, it really asks that question. Can today's separate blockchains actually become tomorrow's interconnected financial network? And what does that mean for everything else?
Exactly. This vision makes you rethink what Bitcoin is or what it could be. It pushes us to imagine a future where the strongest foundations get even better with smart, functional layers built on top. So, what possibilities does this kind of deep interoperability open up for you? Or what new questions does it raise as you think about the future of digital assets? How might these different networks increasingly collaborate to create totally new kinds of value and utility? It's a space that just keeps evolving, and these kinds of bold ideas are right at the cutting edge.